breaking down the deals, data, and disruption shaping global markets. You're listening to The Daily Ledger with Dennis Sert.
Hey folks, today is Thursday, November 20th, 2025. This is the Daily Ledger Show. I am your host, Dennis Sert. As you can see, I've gotten a new mic. Very excited about it. Also a new webcam, 4K. The angle is a little narrower than it was before, so I don't know how much I like that. I may return it and then get a wider angle 4K webcam, but nonetheless, we've got some good stuff to get into today. So let's dive right in. Let's get this share screen going. So the first thing I wanted to talk about today is the fact that the FOMC meeting minutes from last month came out just yesterday. So the October 29th meeting where they cut rates by 0.25% or 25 basis points. The meetings for that, or the minutes for that meeting, just came out. So I wanted to highlight something I found in here. So basically, CNBC and all these guys are sort of talking about like, in discussing the near-term course of monetary policy, participants expressed strongly differing views about what policy decision would most likely be appropriate at the committee's December meeting. So if we kind of look at what CNBC is referencing here, we can do copy paste like a Command C. Looks like I didn't get all of it, so I'm just gonna do this much and then do that. All right. So they're talking about this. So I just read that, and then it goes on to say in the minutes, most participants judged that further downward adjustments to the target rate for the federal funds rate would likely be appropriate as the committee moved to a more neutral policy stance over time, although several of these participants indicated that they did not necessarily view another 25 basis point reduction as likely to be appropriate for the December meeting. Then it says, several participants assessed that a further lowering of the target rate range for the federal funds could well be appropriate in December if the economy evolved about as they expected over the coming intermeeting period. So I think what this is saying, and I don't want to cap it at what CNBC capped their quote at, I actually want to kind of refer to what the meeting minutes continued to say. What I take from this is that some of them basically said, oh, well, we're definitely probably going to lower rates sometime in the future, right? So that's what they're saying here, actually. So I went back to that previous sentence. And it's saying like, oh, some of them said it may not happen in December. So that's what this is saying. But then they basically kind of erase their insinuation in their previous sentence here with this sentence by saying, well, as long as things go as we expect, we're going to cut rates. So that's what this is saying here. So let me read sort of the second clause before the first. If the economy evolves, I'm going to kind of like paraphrase it a little bit. Okay. So I'm not reading it directly. So it goes, if the economy evolves about how we expect it to go, we will likely cut rates in December. That is what this sentence is telling me, which is kind of interesting. And then you move on to this other portion of the meeting notes, right? So again, these are the meeting notes. I should have started with this. So if you look at voting for the action and voting against the action, it says voting for, so there are 12 voting members on the chair, and there are some more like non-voting members, but I guess those don't really matter because they're not voting. So let's just count the voting members, which there are 12 of them. Um, Voting for this action, as in the October 29th rate cut. So I'm not going to read off all of the names, but we have Jerome Powell, we have Lisa Cook, we have all these kind of people, 10 of them specifically, voting for the 25 basis point cut in October 29th, on October 29th. And then you have voting against the action. So this one guy and this other guy here, so Jeffrey and Steven. But what's interesting is that so these guys dissented against the 25 basis point cut. Only Jeffrey dissented due to the reason we may think, right? Which is that he preferred no change. But what's interesting is that Stephen didn't dissent because he preferred no change. He dissented because he thought the basis point reduction should have been more. He thought that the Fed should have cut the rates by a half percentage point or 50 basis points rather than the 25 that everybody else voted for. So really, Stephen is in this camp. I think it's fair to say that, if there were more like actual dissenters like Jeffrey who preferred no change, Stephen would have just gone ahead and put himself in this category, right? Because he preferred to lower the target range for the federal funds rate by half a percentage point. That means that he is in effect voting. He is in effect with everybody else who are also voting to cut the rate, albeit by a lower percentage, by 25 basis points rather than the 50% basis points. So really, what the takeaway for me here is that 1 out of 12 of the voting members on the Fed chair, on the Fed, said that they preferred no change in this past October 28th meeting. Wow. And then everybody, including CNBC, is then saying, not even then saying, they're referencing some other paragraph and sentence, and then you have people like CNBC who say, oh yeah, well, we're definitely not getting a December cut. In fact, it says right here, in Fed parlance, many is more than several. All right, thanks for the kindergarten lesson, CNBC. In Fed parlance, many is more than several, indicating a tilt against the December cut. You sure about that? You sure about that? To quote the meme here. Yeah. So that's sort of my take. In fact, they actually kind of they bury the lead a little bit, right? Because like on like the nth paragraph here, they go, but the 10 to 2, sorry, 10 to 2. Here, I'm just gonna start again. But the 10 to 2 vote was not indicative of how split officials were at an institution not generally known for dissent. So this is the only sentence in which they sort of like acknowledge what I pointed out, which is that almost all of the voting members were for the rate cut. And then specifically, 11 it was 11 to 1 for people with the sentiment of reducing the Fed rate. Meaning it was really only one person who said let's do no change again. So just reiterating what I said earlier. Yeah, and then it goes on to say officials generally indicated concern over a slowing labor market and inflation that has, quote, shown little signs of returning sustainably. But if you go back to the minutes, they basically say like, oh, we're probably gonna cut rates as long as the market continues to go as we expect, which is kind of what they said. Which is here. The December lowering of the target range could be appropriate if the economy evolved as expected over the intermeeting period. This says we will probably cut rates. Okay, so I think I've sort of made my point on that. So let's go ahead and move on. the next story we have here is I actually want to jump to Nvidia first. So they did really well. So let's read this headline: Nvidia's record $57 billion revenue and upbeat forecast quiets AI bubble talk. Nvidia founder and CEO Jensen Huang struck a bullish tone in the company's third quarter earnings. And based on the company's results, there may be a reason to. Nvidia reported revenue of $57 billion in the third quarter, 62% higher compared to the last quarter, so the same quarter last year. Both revenue and profit results beat Wall Street expectations. Yeah, so this is kind of crazy. I'm looking for the exact Jensen Huang quote, which I think I have right here, and he basically said it was off the chart. So he said, so this is Jensen Huang. Blackwell sales are off the charts and cloud GPUs are sold out. Compute demand keeps accelerating and compounding across training and inference, each growing exponentially. We've entered the virtuous cycle of AI. The AI ecosystem is scaling fast with more new foundation model makers, more AI startups across more industries and in more countries. AI is going everywhere, doing everything all at once. Yeah. So that's pretty powerful language there. Okay. Let's move on. So it looks like the unemployment rate increased slightly. By I think it was higher by 0.1% than what was expected. So let's see, the New York Times employers. But at the same time, there was better hiring numbers than what was thought, which are slightly distinct. So employers added 119,000 jobs, but the unemployment rate edged up to 4.4%, a sign of weakness that could prompt the Federal Reserve to cut rates in December. So, yeah. I mean, if the New York Times is admitting that, well, the Federal Reserve may cut rates in December, it sort of just adds fuel to my argument a little bit earlier when we had the Fed meetings set up. So this is definitely a good sign in terms of potentially cutting rates in December, right? So that unemployment tick up. Yeah. So there's that. Here's this Wall Street Journal article saying the same thing, essentially kind of leaning into the 119,000 new jobs grew. Okay, and then this is what I was kind of looking for just now. The unemployment rate, which is based on a separate survey from the jobs figures, rose slightly to 4.4% as 500,000 people joined the labor force. Yeah. Economists expect the unemployment rate to hold at expected the unemployment rate to hold at 4.3%. So that's the 0.1% that I was just talking about. Okay, so there's that. That's all I wanted to talk about today. Maybe a little bit shorter of a segment there, but let's just move on to Byte AI. Make sure to download Byte AI. It sponsors this show. Byte AI is pretty much a data aggregation tool. It's kind of like a financial. It's basically like a financial co-pilot as you invest. Of course, it's not actually a financial advisor, and past success doesn't guarantee future results. But it's a great tool to help kind of better understand succinctly, as we see here, with the underbought, neutral, or overbought kind of stamps, if you will, that are green, gray, or red. It's a good tool to sort of aggregate technical indicators, right? So the Bollinger Band and the RSI curve, signal MACD curve, right? Takes all of those together. And then you also have the news sentiment at the same time. So that's all taken into account. So let me go ahead and refresh this, and then let's let me log back in, and then let's take a look at what we got. Okay, so Tesla is overbought now. Before it was saying underbought because it was slightly out of date, and this kind of refreshes every half hour ish to an hour. Okay, analysis overbought Tesla. Public rationale, the RSI of 74.5. Wow, that's pretty high. Indicates an extreme overbought condition. The price sits near the upper bound of its Bollinger Bands, roughly 5% from the top, while today's move 5% up and the week's gains are strong. The MACD is only mildly bullish with that signal line very close, suggesting upside momentum is not expanding. New sentiment is mixed to bullish with catalysts around robotaxi and AI leadership, but headwinds from BYD, Xiaomi competition, and potential EV subsidy shifts cap upside and raise risks of a near-term pullback or consolidation. Recent coverage on Tesla shows a mixed to bullish tone. The strongest near-term positives center on Tesla's robotaxi rollout and long-term performance. Several pieces highlighting stock upside from. Okay, so I'm actually going to open up Robinhood right now, and if I have any Tesla, I'm going to sell it. Okay, I'm going to go ahead and actually just dump everything. It looks like I only had $15 in there. All right, there we go. Let's move on. Looks like Amazon is a non-neutral position. Okay. Analysis underbought Amazon. The RSI at 43.27 signals a mildly underbought condition, suggesting scope for a mean reversion rally rather than continued downside. While MACD remains near the signal line with a slight bearish tilt, this does not imply strong downside momentum, and the overall price action shows a modest single-day rebound, up 1.5%, alongside a negative week and positive month, indicating potential near-term stabilization rather than sustained drift lower. Generally viewed as neutral in the analyzed articles, with some near-term upside signals. The strongest positives came from Berkshire Hathaway's continued mega cap tech exposure, including Amazon, and from Zacks noting Amazon's role in driving strong Q3 retail results. Yeah, well, we're getting into holiday season, aren't we? Okay, I think we can leave it there. Make sure to download Byte AI, which is available as an iOS app as well as a web app. If you use the code podcast20 at Stripe checkout while logging in via the web app, you'll get 20% off, and it'll be a fun time. You can it'll carry over into your iOS app automatically, the discount will, and it'll be a fun time analyzing stocks as you do trades via AI on the latest and greatest information. Okay, let's leave it there. Hopefully y'all like the setup. I think I'm gonna get a black background, so like the guitar and the bed aren't showing. But yeah, hope you guys have a great day. Make lots of money out there. Have a good one. See you tomorrow.